Alright, what's going on, y'all? Today I'm going to be making a video over EMAs and SMAs. All that is moving averages. And so, like I said, I'll just be covering how moving averages can help you stay in a trade or even enter a trade. Alright, so first let's start off with what an EMA is or even an SMA. So in our ebook right here, we have, our indicators tab. We have overlays and oscillators. And so our EMA is going to be a type of overlay. So an overlay is an indicator that is drawn directly on top of the price chart. They move with the price and help identify trends or support and resistance levels. So here are some examples. We have our EMA, SMA, Bollinger Bands, VWAP, and these are all overlays because they like overlay the chart. They're just on top of the candlesticks basically. Yeah, so to add the EMAs and the SMAs, just come up here to indicators. I just type in EMA and it'll pop up right here. I like to favorite it just in case my chart ever gets cleared. I can just go to my favorites and add it right back. But I add 3 of these and then I'll clear this out, type in SMA, and simple moving average will pop up and I just add 1 of those. And you'll see them all right here. If you don't have the upgraded version of TradingView, you might not be able to add as many indicators. So I would recommend upgrading your TradingView at least to the, I think the second tier. I don't remember what it's called, but I know the second tier is pretty good. I think I have like the second to best one, so I can get a lot of indicators. Let me see if I can. I don't feel like looking for it. But, so right here on SMA, you just click this settings button right here. And then on the SMA, I like to do 200. And then I leave all of this the same. And I like to make my 200 yellow. And I like to go the thickest line. And it'll pop up on your chart, it'll move. So, like I said, the moving average is just taking the average of the last however many candles. So, since we changed this to 200, it's taking the moving average of the last 200 candles and it's literally like calculating it for us. And so that's our SMA. The difference between SMA and EMA is basically the EMA is used for shorter trends and then the SMA is used for like longer, stronger trends. So the SMA is better for a longer trend. So that's why we do the 200 on the SMA, and then our other ones we just use the EMA because they're better for shorter trends. And so on here we'll come to the first EMA. You can either make this one 9 or 12. I use 12 usually, and on my 12 EMA I always say 9/12, so it's either the 9 or the 12, whichever one you prefer. I just change that to 12, leave everything else the same, and come over here to green, and you can leave that one at the thinnest line. For your next one, I like to do this one as blue. I leave it as blue, and then I put this one as 21. So this would be the average of the last 21 candles. And then for the third one, I changed this one to 50, and I put it as purple. And you can make that one the second thickness. And so you see Bitcoin is tapping right at the the 50, and we'll see if it closes above. It'd be perfect if it actually stays under, because this would be a part of a strategy I kind of use. Alright, so once you got your EMAs on, the way, like I said, I like to color code mine. I always make the 12 or 9 green, the 21 blue, the 50 purple, and the 200 yellow. No matter what chart I'm on or what app I'm using, whatever it is, I always make it these colors. That way I can just see the color and kind of remember it. This blue is kind of hard to tell that is blue, but you get the idea. And so let's start with the 12 EMA or the 9 EMA. With this EMA, I like to use this EMA to help me stay in trends. So you can see that you can use this EMA as like a support like I said in the ebook, we can use this as a support or resistance, right? So we see that Bitcoin right now on a 5-minute chart is in, a downtrend. We had this high and we haven't broken this high, and we just keep making, lower highs, right? And we see that this is a pretty strong downtrend as of now. And you see how at first we were kind of staying above this. Let's just hide all of these real quick. Boom. So you see how we're staying kind of above this 9 or 12 EMA, and every time we tap it, we just kind of bounce off of it. Look, we're wicking off of it. We finally closed under it, right? But we ended up getting right back above it, kind of closed under it. We got back above it, and now we're holding it again. And as we're climbing up, we're just holding this 12 EMA, right? And, even right here. And we finally get this big candle up, still holding it. And it finally starts to arc. So if you pay attention, and you can see this, let's see if we can go in replay mode. Right here, let's say right here. So even before the candle closed, you can see how it's kind of starting to, like, on the uptrend, you can tell that it's just going up, it's scaling up, right? You can clearly see that, this is just, let's delete all this. You can clearly see that, starting here, we're just going up. We kind of get flat here, but for the most part, we're just scaling up. And here we start getting flat again. And let's go to the next candle. It was a high volume candle, but you see how we're like arching down now? Like the EMA trend is literally like facing downwards. That tells us that, this trend is kind of flipping to bearish. And like I say in any of my other videos, you can't just trade off of one thing. You need other confluences to go with it. So you can see we have a key level here at 90,000, right? And Bitcoin is failing. We tried to break above it, but we instantly fell. Then we started rejecting off of it, and you see some rejection come in. So we're failing this 90,000 level, and now our EMA is starting to slope downward, and we're closing under the EMA. That tells us, we're kind of switching trends. So with this, if this continues to just go down, let's say we broke this level right here, because if we want to get, let's say we were really charting this, we'd say we have a fair value gap right here. Let's see, boom. And let's say this, we rejected off 90,000, we have this fair value gap, and we inversed it. We're also, pointing downwards on this EMA. And let's see what we do. Boom, we inverse this fair value gap. We get a break of structure here. And so now we have everything we need to know that, this could continue going if we stay, under this level. And now with this trade, let's say we got in at the top tick of 90,000 and we're profiting and we're taking profits, but we want to leave some runners like we talked about, in the last video. You could use this 9 EMA to help you stay in this trend. So now you see that just like over here it was being used as support, now this 12 EMA, 9 EMA is going to be used as resistance. So you see how it's just hovering over the candles, and you can see it kind of the slope changing, but it tapped it, it rejected off of it. There it finally kind of broke above, but it just fell right back below. And even when it broke above right here, let me see, when it broke above like right here, we still have this level that we had to break a structure at. So now we know this is also some resistance above. So as long as we don't get above this, we know that this trade could continue going. This EMA is still valid, even though we popped up above it, one candle, never tested this level, and the next candle literally got right back under it. And now it became, our resistance again. And you can see it's just following it, staying right above it, becoming resistance until I think we'll be live here soon, but just continues being, look at that, resistance to our chart. You know, some candles close barely above it, but the next candle is literally right back under it. And so that could kind of confuse you. You know, if it's doing a lot of that, you see we're finally sloping up, but it fell right back below it. And so by the time we turn on our 21, you see that, let's pause this. You see that our 21 is just being tapped one time. So even though we're closing above it on the 12, this is where our 21 comes into place. And you see we never got a candle close above the 21. So now this is like another layer of resistance. We tap this 21 and we're right back below it, just felling. And this is the part where it starts getting interesting, is when these EMAs cross. So whenever they cross and they become like in line with each other and they both slope up, well, then you can tell that the trend is kind of changing. So you see right here, they're getting all jumbled up and kind of crossing. And so if we can get, you know, this arc to start going up, then we know that we could possibly be switching back to a bull trend, depending on our other confluences, right? Because like I said, everything has to co-align with other things for it to be true. We can't just go off one thing and expect it to happen like we want it to. We need other confluences. So like I said, these EMAs are now crossing, and this could happen on the downtrend, this could happen on the uptrend. Let's see if we can find it. Boom. See right here how these are just like in line with each other, and they're both sloping down now. The 12 crossed the 21, and you can just see it crossed right here. Now this is like a strong resistance level, and it's just following. And now down here they're crossing once again. This 12 is crossing the 21. That's kind of like your signal line for you to know that we could possibly be flipping again. And so this could be an area, like I said, if your levels make sense and you have other confluences, this could be a level or area that you could be getting ready to get into. And if the trend continues, we could be using these EMAs as kind of a support or resistance, just depending on which way you're going. Then we have the 50 EMA. So on the 50 EMA, I trade gold, the ticker, let's see, GC future sign. I trade this a lot, and what I'll do with the 50 EMA, I took so long to record this video because I was wanting to find a live example and record it like live in the market, but I wasn't able to. But what I like to do with this 50 EMA is, and hopefully one day I can get a clip of it recorded, but sometimes what gold will do is it'll come down to this 50 EMA and it'll kind of do like a liquidity sweep, like at a key level. So this 4340 level is actually a level I had. Let's see. All right, so this is the Discord. I just wanted to show y'all this 4340 level is a level that I actually had. You know, I think this was Sunday or Monday or something, whatever, but you can see I talked about this 4340 level. So we have the 50 EMA kind of in the area of this 4340 level, and you see we did like a liquidity sweep, and you know we ended up making a pretty big move off of that sweep of the 50 EMA at this key level of 4340. So sometimes what I'll do is I'll wait kind of, if we're rejecting off something and is going to retest the 50 EMA, I'll wait for a candle to close below the 50 EMA, and then I'll wait for it to sweep the key level or tap whatever key level I have under it, and then I'll be looking for it to get back above that 50 EMA. And usually from the push up from the sweep to back above the 50 EMA, I get a pretty good move. But if it continues, you know, now I can just use my EMAs once again. Just look how it's holding these EMAs. We never tested this 50 EMA until 4357, but we had a high of 4374. That's a pretty big jump. That's almost a 30-point jump on gold That is a 30-point jump on gold. And as you know, with gold, a 30-point jump, you can make a lot of money if you size in right. Um, and so even with the short-term trend, you see that we're holding this 12 EMA, we're holding this 21 EMA, and we're just running. We're just running, and we're using this to help us stay in our trade. Um, like I said, I want to get a live example of how I do this 50 EMA sweep, but this has made me, I've gotten some good trades off of doing this 50 EMA sweep at a key level. And then, like I said, using the smaller trend lines using the smaller EMAs just help stay in your trend longer, and help you scale out. And the last one we have is the 200 EMA. Now the 200 EMA, the higher number EMA, the stronger the move or the bounce or the resistance, support, whatever you want to say, the stronger it's going to be. So the 200 is like the big daddy of all the EMAs. Now if you put 400 on your chart, obviously it's going to be stronger than the 200. If you put 600, obviously, but the highest I usually go is 200. And for me, this is, like I said, the big daddy of all the EMAs. And so usually when we tap the 200, either for support or resistance, you can expect the move off of it. But for me, the 200 kind of tells the overall trend. So just like the smaller EMAs, you see how the 200 is sloping up right here. So this tells me, see how it's sloping up? You can see that we're clearly going up, right? We had a little bit of a downtrend, or we're moving kind of flat. Now we're back on the slope up. This tells me we're in an uptrend on this time frame. If we go to the higher time frame, it'll be different than the lower time frame. Boom, you see on the higher time frame, we're still in a crazy uptrend. And you can see it just from a far perspective that we haven't tested. Let's see, right here, we're just flowing, going up. Nothing's stopping gold right here. We finally started testing a 200 EMA, and you see we're bouncing off of it, still making moves up, still holding it. We're still sloping up. And as long as we're above this EMA, we can imagine that it's just going to keep going up until we get below it and it starts sloping down like this. Then we'll know we're in a downtrend, right? Even though we're getting these pullbacks on gold, we're still in the uptrend, because if we draw a trend line, we can see that, this trend hasn't been broken, and our 200 is telling us that as well. As well as the 50 EMA, you can see we kind of crossed it here. The 50 kind of crossed it here, but we went right back above it. And so whenever all these EMAs start sloping down, so let's say the 50, for example, the 21 and the 12, and we start sloping down, and then, we cross this 200 EMA and we slope downwards with these 200 EMAs. I know my drawings aren't the best, but we start sloping into this 200 EMA, and our 200 EMA starts sloping. Well, now we know we're for sure in the downtrend, and the higher the time frame as well, the stronger the trend. So earlier we were looking at the 5-minute on gold, Bitcoin. We were looking at the 5-minute, but if we go to these higher time frames, these EMAs are even stronger on the higher time frames. So the same way we use the lower EMAs to stay in the trend, we can do that on a higher time frame as well. And these moves are just going to be even stronger, right? You see that we kind of had this 50 EMA sweep at this key level of 4,200, which was a pivot point for me the other day, or last week, whenever it was. We had our 50 EMA sweep, and you see from this 50 EMA sweep, we went from 4,200 to a high of 4388. You know what I mean? That's almost a 200-point move, which is insane on gold. And we're still holding the trend, and this could continue running. So EMAs definitely help. Hopefully this video helped y'all understand EMAs and how to use them, or get a better idea of them. If not, just ask your questions. The Discord link will be in the bio, so if you're not in there, join up, ask your questions, and I can make it more clear if this video didn't explain enough. And let's continue to get better and better. Hope you have a good one. Alright, y'all, so here's an example. The market just opened, and so I got some levels here. You see we got the close under the 50 EMA. I have this level at 43.67. So just with one contract, I'm going to take a trade, and I'm going to show y'all an example of what I was talking about. So I'm going to just do this with one micro contract. I want to get a little closer to our level at 43.67. All right, so that's close enough for me. Let me see if I can pull this up for you. All right. So y'all see we got our entry, and we have our stop loss. And so I just have a random stop loss set, I'm going to be honest. But I do want to see it hold this 43.67 level, which was right here. And I want to see if we can get the reversal. This isn't a trade that, you know, I'd actually take, only because I didn't have enough time to really chart nothing. I just seen it closing under this 50 EMA, and I seen this 43.67 level, so I'm kind of expecting it to work. But like I said, I'm not for sure how strong this level is and all of that. But as you can see right now, it is kind of playing out. And like I said, this is with one micro contract. So you see we got our entry. We're only risking a few points, maybe a point max. And if this is the low, you know, we can already pretty much move our stop loss to this candle low, because knowing market structure, we shouldn't break this low. And this is, like I said, kind of what I do. Once we bottom out, I'll get my entry. Or if it taps my key level, which it did right here pretty much, I'll get my entry. I have my stop loss a little bit under it, and then I'm just waiting for the reversal. You see we're getting a reversal now, and we're already pushing up. We've made $15 a contract. So if we had, let's say, 20 contracts, you know, we already made $300 on this trade, risking a small amount, because you see our level was 43.67, and you know our entry was right near it, and we didn't break below it, so we had like a 1 point stop loss, and this is already pushing up. So sometimes, like I said, I'll just take a quick scalp off of this. If I went in with 20 contracts, I already made $300. And this does have the room to continue going. So now what I'd be looking for is for this to get back above this 50 EMA and start reclaiming levels. And if it does that, you know, it has the potential to, like I said, flip this and keep going. So I'm gonna hold this for a little bit, and I'll just cut to it if it goes up, just so y'all can see the profit. I won't mess with anything. Even if I lose, I'll just come back. But you know, this was already a winning trade, technically. Just depending on, you know, how much you're working with, what you're okay with winning. You know, the trade went green off of our strategy, and at that point, it's on you if this trade goes red. Now, it's not, you know, a big gusto trade, but $15, $20 per contract, that's already pretty good for a quick push-up. All right, y'all, so I just got wicked out. This trade seen a high of like $20 per contract. So if you had 20 contracts, you know, you made $200. I could have had the stop loss, you know, still a little further. I'm gonna be honest, it's probably just gonna sweep me out and then reverse and make the true move. But still did $20 per con. Yeah, look at it go now. That's just kind of, you know, what I look for. The strategy, it looks good now. I mean, it probably wicked me out by 1 point, but you get the idea. I was hoping that it was going to keep going so y'all could see how much profit, you know, you could potentially make off of it. But hopefully you get the idea. You know, if it gets up here, this will probably be like $30-$40 per con. And if it keeps running, you know, if you make $50 per con with, let's say, 20 cons, that's $1,000. You know, just off this simple strategy. Y'all seen how tight my risk was, and you know the entry was right on point with our level here at 43.67. If I would have kept my stop at where it was originally, you know, we'd still be in this trade, and we'd be over $20 per con now. But that's pretty much the example, and hopefully that helps.